Hi everyone, this is Jay Liu Chaojie from China. I'm now a PhD student in finance at the University of Bristol, and this is a project developed together with my supervisors Richard Harris and Manuela Pino. It is our pleasure to introduce you the products of future financial advisory service, artificial intelligence robot advising, AIRA. So first of all, what is robot advising? Robot advising is an automated financial advisory service which is known for its easy accessibility and low cost of financial advisory services. So from 2010 till now, robot advising RA has evolved in the last 2 decades, driven by the availability of big data and algorithms. However, most of the robot advising today still heavily rely on passive products like ETFs and mutual funds, with limited applications of artificial intelligence. So here is the general timeline of the development of robot advising industry. Before 2014, it is basically very basic hybrid human robot advising service, providing basic portfolio management and very limited risk preference analysis. So from 2014 to 2019, you have robot advising 2.0, which has become fully automated and more investment strategies available, but still very limited analysis on investors' risk preference. And from 2020 to now, we have a little bit more advanced and powerful robot advising available. For example, the Vanguard's DAS, which provides fully automated robot advising services and quite personalized already, and with deeper analysis of investors' risk preference. However, we are proposing the next generation of robot advising 4.0, because we think here are some basic issues. And first of all is how the traditional robot advisors from robot advising 1.0 to robot advising 3.0 are doing to analyze investors' risk preference. Most of them are trying to analyze investors' risk preference based on closed-ended multiple choice questions or some games which are still kind of like multiple choice questions, I guess. And in the psychology literature, questionnaires with multiple choice questions can not only reflect a part of the real opinion, and always not all, and it has been argued that open-ended questions with multiple choice questions can measure different aspects of the comprehension process of individuals, and free tests can be used to measure emotions, etc. It was technically difficult to analyze investors' open-ended questions before. However, in recent years, we have very powerful text analysis techniques, and especially now we have large language models like GPT, etc. So we think it has now become possible to use open-ended questions to assess more in-depth information of investors' risk preference and their wants and needs better than the analysis of traditional open-ended, closed-ended questions. And so that's why we are introducing the next generation of robot advising 4.0, AIRA. So AIRA is set to be a fully automated advisory service product with really high personalized investment strategies available, and do risk preference analysis with tailored AI using a combination of closed-ended and open-ended questions. We also do expectation analysis and management with tailored AI so that AIRA can, frequently interact with investors just like your human traditional financial advisors. And of course, basically, very basic, we will use machine learning powered financial asset selections and also tradings to decrease traditional biases in human financial analyst training, and asset selection. So this first step is to develop a tailored chatbot for robo-advising, together with behavioral psychologists. So AIRA, for the first stage, we want to train our own AI chatbot based on existing large language models with behavioral psychologists to analyze both multiple choice questions and free test responses to measure investors' real financial literacy, risk preference, expectations, and wants. In the future, we may also apply virtual consultations so that investors can have online consultation meeting with the AI agent about their investments, so that we have real, robot as an advisor and the literal sense of robot advisory service. We think these projects could contribute to several main points. First of all, it is an interdisciplinary research that fosters outputs of academic research into real-world applications. We also think this will be a novel product for the future of financial advisory industry. And we think these products and our research will also contribute to the discussion of financial regulation on robo-advising, on fintech applications on the market, complemented by our other research projects on robo-advising effects on investor welfare and financial markets. And we think by the availability of AIRA, this will lead to higher social and investor welfare by better allocation of their resources and the social resources following investors' exact needs and wants. And that's all. I hope you like this idea, and I welcome any of your feedbacks or suggestions. Thank you.